It is 11:03. Today is Monday, August 17th, and this is a special meeting of the Town Board of the Town of Newburgh. The purpose of this special meeting is for the accounting firm RBT to present their audit of the financial statements of the Town of Newburgh for the year ending December 31st, 2019. First order of business would be roll call. Mrs. Green?
Here.
Mr. Ruggiero?
Present.
Mr. Manley?
Here.
Mr. Lobiondo?
Here.
And Mr. Piaquadio?
Here.
Okay. Next will be, if everybody would please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States
of America.
Pledge allegiance to the
and
flag
to the republic
of the United States of America
and to the republic
which it stands,
Stands
one
one
nation,
nation,
under
under God,
under God,
indivisible,
indivisible,
liberty and justice.
And justice for all.
Thank you, everyone. Okay, Mr. Supervisor, we can proceed.
All right, Joe. So with that, from RBT, I don't know who's going to lead off, Donna or Jane. I don't know who's going to lead off here, but we're ready.
Jen's gonna go first.
Okay. Well, good morning, everyone. It's a
Morning. Good morning.
little different presentation format, but I think it actually might work well because what I'm going to do is I'm actually going to share my screen and put the financials up on the screen. So we will be guaranteed to all be on the same page at all times.
Excellent.
Okay.
Sounds good.
So, share screen. Okay. Everybody see the financial statement?
Yes.
Looks good. Looks good.
Okay. And I think Ron sent these out to you all, so you also have them
Yes.
for reference. So this is the audit for 12/31/19. And so the first thing that we want to say is that everything went well and we had a clean opinion, which is the most important thing. The financial statements are fairly presented in accordance with generally accepted accounting principles. So you can proudly tell the public that. The next thing we're going to mention is the management discussion and analysis. There's some sections in here that actually have comparisons to the prior year. And that's interesting for people to look at. So you can see how things have either improved or hopefully not gotten worse from one year to the next. So from 2018 to 2019, the town's assets actually increased 3.8 million. So that's a good thing. And now keep in mind, this is at the government-wide position, meaning that it's everything, the funds, it includes all of your capital assets, all of your debt. So it increased 3.8 million. And your net position, which is the difference between all of your assets and all of your liabilities, also, although it's negative, it improved 4.5 million. And the big reason why it's negative is the other post-employment benefits, which we'll talk about in just a minute. Other thing I want to point out is that your revenues actually increased about 1.5 million over 2018, and your expenses decreased 1.1 million over 2018. So net, your change in net position was $2.6 million better in 2019 than 2018. All right. Can everybody hear me okay?
Yes. Yes.
All right. Another thing in the MD&A is this is a breakdown of your fund balances, general highway, water, sewer, capital, and it breaks it out by the different categories. So is it non-spendable, meaning basically it's a prepaid, you've already spent the money, you can't spend it again? Is it restricted, basically in your reserves? Then you've got assigned, which is generally what you have appropriated for next year's budget. And then, or in the case of all the other funds, it's whatever's left over, because you can't use highway money for anything but highway. And then there's the unassigned, which for the general fund is everything that's left over, what can be used for any purpose. And so you have a very, very healthy unassigned fund balance in the general fund, and it increased. So it was $6 million in 2018. So the bottom table is 2018, and it increased 1.4 million in 2019. So that's excellent. That's very good. The sewer districts, you know, the two that we know are a problem, have historically been a problem, they actually got worse. So they went from 35,000 negative to 57,000 negative. And we'll talk about that a little bit more when we go into the sewer funds. So now we're moving into just 2019. We're done with the comparisons. This is the detail for your net position, again, which is everything that the government has. Cash, $32 million. That's pretty healthy cash amount. Your capital assets, which is all your buildings, your water plant, your vehicles, equipment, net of depreciation, is $42 million. Your liabilities are really, in the grand scheme of things, very small, other than this other post-employment benefit number. So all the health insurance that you have promised to pay your employees when they retire, $101 million. And I know we had this discussion last year when you had to book the whole number. It's by far the largest number on your entire balance sheet. And this again is a soft liability. Nobody's going to come and ask you to write a check for $101 million. I think if they did, Ron might have a heart attack. But it is something that you need to keep in mind, especially when you're doing negotiations for what you're going to put into your union contracts, that this is what you have promised in the future. Could everybody mute? So I think we're getting some vibrations. So if you want to talk, that's fine, but if you just mute in the meantime, that'd be great. So again, your net position, the difference between your total assets and your total liabilities, is a negative. Your liabilities exceed your assets by $51 million. But if you didn't have this $101 million OPEB, obviously that would be a positive number. And the net position number is broken down into three categories. So you've got 22 million, that's your net investment in capital assets. So that's this $42 million of capital assets minus any debt that's outstanding on that. So like the debt on the water plant and those types of things. So your net investment, what your equity in your capital assets, is $22 million. Then this interesting schedule shows the net cost to the town for each function that the town provides. Public safety, obviously, is a major function. But so what this schedule does is it takes your total expenses by function and then nets out any direct revenue that is generated by that function. So if you think about public safety, well, you really don't want public safety to be a money-making function, right? I don't think anybody wants a for-profit police department, but you do generate some money in the form of tickets and things like that. You also get some grants that come in. So what I want to point out here is that the net cost that for public safety is $12 million, which is by far the largest cost to the town. Your net cost of general government, the general managing of the town, is 5.6 million. Transportation, which is all of your highway, is a net cost of 5.7 million. Home and community services, this is an interesting one because it's your second largest as far as expenses, only behind public safety. But because you generate so many fees associated with those programs, like your rec department and things like that, that the net cost to the town is only $161,000. So in a sense, it almost pays for itself. And your change in net position, the increase from 18 to 19 was $4.5 million. So that's excellent. The next page is your funds. This is what you're used to looking at: general, highway, water, sewer, capital. And the fund balance overall for all of them is positive. 11 million fund balance for general, sewer. Although you have a couple problems in sewer, the overall fund balance is $6.8 million. So very healthy fund balances. Now, the difference between this schedule and the one that we were looking at first is that this does not include any of your capital assets. It doesn't include any of your debt or any of those long-term liabilities. And this schedule just shows the conversion. How do you go from the funds to the statement of net position? And your three largest reconciling items is capital assets, bonds, which is 19 million, and the OPEB, which is 101 million. As far as activity within the funds for the year, general had an increase of $1.3 million. Highway increased $610,000. Water went down a little bit, $105,000. Sewer increased $703,000. Capital projects went down $103,000, but that's because you were actually completing the projects. And then all of your non-major funds actually increased $220,000. So net increase to your fund balances was 2.6 million from 18 to 19. When you look at your expenditures for the funds, you can see that employee benefits is broken out as a separate line, because although that's not a function of the government to provide employee benefits, it is a significant cost. So for fund purposes, you do actually break out employee benefits as a separate line. So if you look within your expenditures, by far the largest single expenditure is employee benefits. So that's all of the health insurance that you provide. It's all the retirement payments. It's a lot of things go into that, but 9.6 million is employee benefits. Then your next highest is public safety. But when you take and you convert that over and you allocate out the employee benefits, that 6.8 million for public safety now goes to 13 million. So again, you can see the employee benefits are just really, really significant, especially when it comes to public safety. And transportation increases about $2 million also when you add in the employee benefits. The last item here is your fiduciary accounts. So your expendable trust, which has to do with the animal control, and then the agency funds. We don't normally pay too much attention to this statement. The reason I'm pointing it out is because for 2020, this is going to change. The Government Accounting Standards Board has put out a new standard. Actually, it was supposed to be effective for 2019, but they delayed it because of COVID, and Ron was very happy about that, and we didn't have to deal with that this year. But we do have to deal with it for 2020, and what's going to happen more than likely is that a lot of these items that are currently accounted for here are going to have to move and maybe end up in the general fund or in a special revenue fund. This is going to require a lot of analysis, and I'm just setting you up so that you know when Ron is losing even more hair, that's why, because it's going to be a lot of work. All right. So This page in the notes just talks about your reserves that you have. As of 12/31/19, the general fund had a $265,000 reserve for insurance, computer equipment. Highway had a reserve for $78,000. Water fund had reserves for capital improvements for $428,000. And sewer had a $2 million reserve for repairs. These are items, this is money that the board has set aside. They can be used for these items, but you have to go through all of the, obviously, the legal channels to use the money. This schedule gives a little bit of detail about your capital assets, how much is land. You have a significant amount of construction in progress, $28 million. And so once those projects are completed, those will get moved into buildings, roads and infrastructure, whichever category they belong in. We mentioned before the other post-employment benefits. The beginning of the year balance was $101 million. It actually increased $360,000, so that was not a big increase, but you're currently paying for 2019, the payments that you made were $3 million. And even paying $3 million a year, this liability continues to go up, because what you're doing currently is you're just paying the premiums for retirees as they come due. New York does not allow municipalities to actually set up a reserve for this. One of the reasons why the retirement system, the liability for that is so small, is because the retirement system is actually funded. You're not allowed to pre-fund this OPEB liability. So eventually they may change that, but in the meantime, you really are stuck. You can't do anything about this. But it is an actuarially calculated item. So I just wanted to show you this, because whenever actuary is involved, it's all about assumptions. So their current assumption was a discount rate of 3.26%. Not really important what the discount rate means, other than this table shows you that if they change that percentage 1% up or down, it's a significant impact. It's $17 million shift on that $101 million. So it's another reason why I say it's a soft liability, because if the actuaries change their assumptions, the numbers could swing drastically. The next schedule, this is for your debt. This is the bonds and the installment debt for the police vehicles. This just shows your maturities. So in 2020, you've got principal payments of $1.5 million. And this breaks it out for the next 5 years and then into 5-year buckets after that. So the $19.4 million will all be paid off by 2037. And this just gives you an idea of how much you need to plan for going forward. I mean, obviously, when you do your budgets, Ron already knows this information, but this just kind of lays out for you when this debt is going to come due. This is a fairly new schedule. I don't know whether we actually talked about it last year or not, but one of the requirements is that a municipality has to disclose any property tax abatements that it is part of, even if you're not the one that negotiated it, but you are a party to the agreement. You're required to disclose who the agreements are with and what the actual amount of taxes that are abated is. So, for instance, Dan Scammer, the tax value is actually $617,000. The pilot that you're getting is $204,000. So net, the taxes that were abated was $412,000. This is completely FYI. But one of the reasons that the GASB required it to be disclosed is because they thought it was something that taxpayers might be interested in. So if you can imagine, taxpayers are like, well, how come my taxes are going up and yet these guys are getting a deal? So just want you to know that it's in there. Like I said, I don't think we talked about it last year. You'll also see there's a subsequent event note. Obviously, after December 31st, the world blew up. Right? We had COVID and everything changed. I don't know how much of an impact you have seen either at town or personally. I think everybody, obviously, we're not meeting in person, so there's at least a minimum there. But we have basically every financial statement has a subsequent event note saying, hey, everything went crazy. We're still trying to figure out what the fallout from this is going to be. And it's just an FYI to any reader of the financial statements that there could be a significant impact in 2020. As I mentioned, we do have this new standard that's going to be effective for 2020 with breaking up the fiduciary activities. Also wanted to show you, if you were, I feel like we talk about OPEB a lot every year, but if you were to actually try to fund it so that eventually you would catch up and have this plan fully funded, the actuary is saying that for 2018, you would have had to contribute $9 million. In 2019, $8.7 million. So you can see that each year the town is paying out premiums of about $3 million. Obviously, if they're saying in order to fully fund this, you'd have to pay $9 million, you're only paying $3 million. The liability is just going to keep getting bigger. It's never going to improve. Again, it's not anything you can do about, but I just wanted to give you a point of reference here. Now, something that you guys are usually interested in is the budget to actual. This is what you budgeted. How did you do at the end of the day? So for the general fund, you budgeted 19.6 million in revenue. You actually brought in 20.7 million. So 1.1 million better than you budgeted. And then on the expenditure side, you actually spent $3.2 million less than what you budgeted. So overall, you were $4.4 million better than budget. And to kick it all into, on top of that, you actually said that you were going to use fund balance to balance the budget for $3.2 million. Obviously, since you had a net gain, you didn't need to use that. So that's good and that's bad, because if you were planning to use the fund balance and bring it down so that you didn't have to raise taxes as much, obviously that didn't happen. So just keep in mind, in almost every fund, you budgeted to use fund balance and didn't end up having to use it. In highway, again, your revenues were $234,000 better than budget, and your expenditures were $1.4 million less. You had budgeted that you were going to use fund balance for $1,045,000, but you actually had a gain of $1.6 million, so didn't end up needing to use that appropriated fund balance. Now, in the water fund, slightly different. Your revenues were actually about $1 million less than what was budgeted, because there was an adjustment. I guess you thought you were going to get another $1 million, some sort of miscellaneous, but that didn't happen. So that is what threw that off. Your expenditures were less than what was budgeted, but you still had a decline for the year of $130,000. So the $25,000 that you had budgeted to use a fund balance did end up getting used. Sewer, your revenues were $611,000 more than budget. Your expenditures were $673,000 less than budget. So the $800,000 that you had budgeted fund balance to use didn't end up being used, because you actually had a net gain of $1.5 million. The financial statements also have some schedules that just give some detail on the non-major funds: drainage, lighting, highway district, debt service, the very small funds. But there's some information in here so that you can see how they're doing. And for 2019, each one of those funds had a net gain. Nothing huge, but they were all positive. Then the sewer fund. So a few years ago, you did the big consolidation, brought almost all of them into Crossroads. Nom Hill and Roseton are still out there. And both of them have negative unassigned fund balance. Roseton is negative overall fund balance. Nob Hill has some reserves, and so as a total, it has a positive fund balance. But they are still negative, and both of them lost money for the year. Nob Hill was down $2,200, and Roseton was down $19,000. So the fund balances are not getting better in these funds. Get some information on the lighting fund, all these different lighting districts. They're very, very small, but almost all of them were net positive for the year. Only Lakeside had a very minimal decline. Then the last item in the financial statements is your schedule of indebtedness. So this is all the debt that the town currently has. 19 was interesting because you took out some installment purchase debt for police vehicles. That was a total of $160,000. Serial bonds, you've got 19 million. The majority of that is the water, the filtration, which is 13.4 million. But in total, your debt is 19.4 million, which I have to say for a town your size is like nothing. I mean, you guys really don't have any debt, which is excellent. And everything will be paid off by 2037. The last bond that you did in 2017 was a 20-year bond, so just got, you know, just a few more years left to pay off the debt. So that is everything I wanted to highlight in the financial statements. Does anyone have any questions?
Jennifer, I wanted to ask you, you mentioned the reserve accounts for next year will be different. They're going to go into the general account. But the reserve account, like the 294 animal control, is a total donation account. How could that possibly go into the general account?
So the fiduciary accounts can only be used if it meets specific criteria, mainly being that it's being held for others. So now that T94 may not end up moving, it just may end up having a different presentation within the fiduciary funds. But a lot of the other items that are in the agency account, that's the huge one that's got like $4 million, those are the ones that are really going to have to be analyzed to determine whether you're truly holding the money on behalf of another entity, or if it's just things that that you're not really sure what to do with. Sometimes gets moved over there. I know there's money sitting there that was collected that you don't know who it belongs to, that's been there for years, and we've talked about every year. We need to talk to the attorney and find out how we can get rid of this money. So those types of things that are kind of sitting there being held, those will have to be analyzed. In some cases, if you're getting deposits, those, depending on how much control, so like I'm drawing a blank on the word, but like the planning department and those types of deposits, depending on how much control the town actually has over how the money gets spent, that will determine whether it's an agency fund or if it really should be, if those deposits should be held as liabilities in the general fund. It's a very involved standard.
All right, thank you.
So, and what's interesting is that you really can't just say across the board, this type of an item is going to be accounted for this way for all municipalities, because it often depends on how it's administered within a particular municipality. Any other questions on the financials?
Hey, Jennifer, Scott Manley here. In the post-employment, obviously, I see what you're doing, but so when somebody retires, you kind of figure out how long they basically would live and what our liability is, that type of thing. Is that how you get that number?
Right. So what the actuary does, and the town has an outside actuary that you've hired to actually do this calculation. What they do is they say, okay, based on the number of people and they use your census data, which is the individuals, how old they are, how many years of service they have, and they project out based on what they believe the healthcare cost trend rates are going to be. Obviously, they're going up. How much, once somebody retires, the town is going to spend providing these benefits to them over the remaining course of their life. So yeah, actuaries have this fun job of guessing when people are going to die. Seems kind of a morbid job to me, but that's one of the assumptions that they're using to project this out. And it's a moving target. And so, you know, it may look very different next year, especially in cities where COVID has, you know, New York City had a huge amount of people that were unfortunately lost to the disease. That may end up swinging actuary calculations because it disproportionately impacted older people. So it'll be very interesting to see how that plays out in the future.
Not to ask the actuary how they do their job, but they also look to see, like, when the Medicare kicks in, we just give a supplement. The insurance goes down a lot for what the town pays. They use all those numbers.
Yep. Yes,
Okay,
they do.
thank you.
And just as a frame of reference, right now, the town has 257 people that will be covered under the post-employment benefits. 107 of them are active right now, and you've got 150 that are currently retired that are covered. Any other questions? All right, if there's no other questions on the financials, then I'm going to turn it over to Donna, and she's going to go over the report to the board. Donna, do you want me to call that up?
I have it up, so
okay.
if you unshare, I can share.
There you go.
Oh, I'm disabled though. I can't do it.
Oh.
She has to give the host to her. Jennifer has to make Donna the host.
Oh, I didn't think I was the host.
Okay.
Yeah.
Or you can just bring it up if that's
tell her to make Donna the host.
You could bring it up, Jen, if that's easiest.
Okay.
We got to make Donna the host and then it'll work.
Yeah, Jennifer can right click on Donna's name, say make host.
Jen, did you hear that?
Yep,
if you're right.
got it.
Okay.
All right, Donna, you should be able to.
Oh, I can now, yay. All right, can you see the Town of Newburgh report to the board?
Yes.
Yes.
Perfect.
We could see it.
Great, so I'm going to continue down to page 1. This is a host of information here. It's communication for you guys that we are required to provide. Summarizing it, even more than it is here, is it says we do have an arrangement letter for this engagement. We do believe your accounting principles that are used are appropriate. There weren't any new accounting policies this year adopted by you guys. Nothing unusual was noted. Everything was corrected, that if we did find anything, we did some journal entries and those were put into your records. And we didn't have any problems, no disagreements with anybody during the audit. I'm going to keep going. And down here, we do have our summary of our audit adjustments that were done. We did do it a little differently this year, and we have summarized them by fund and just by the effect on each kind of account, the assets, liabilities, your equity, revenues, and expenditures. So you can just see the results. Not too big of numbers, as you can see. Highway did have 193. All the rest are not too bad. And those were the results of 10 journal entries, and Ron has seen them and accepted them and agrees with them. So we do have a few pages down is our letter that we give, which we summarize some management suggestions that we have for the town from what we've saw during the audit. The first few indicated by the little star are repeats, and I know a lot of this stuff is because you guys are working on it. The first one is the sewer fund balance, which were negative, and Jen has basically covered that a few times during the financial statements. Trust and agency. I think she did reference that too. Some money that is in trust and agency that we don't know who that belongs to, so that still is sitting in trust and agency, and it actually might now really have to be dealt with GASB 84 and the new standard next year. Again, this is the GASB 84 saying we got to get ready for that. It's going to come next year, so there's going to have to be a lot of prep work for that. Escrow balances, again, that will come down to next year. Really have to get looked at because of old escrows being held in the trust and agency, and we'll have to adjust that with GASB 84. Some new ones, bank reconciliations. The town clerk bank rec, I think it was due to the changeover in the town clerk. So there is some money in there that is a balance of $5,000 and change that is unidentifiable. So we suggest that try to figure out what to do with that. Maybe consult legal counsel. Attorney invoices. We just wanted to we wanted to tell you that we think a good idea would be is to ask your attorney if they could provide more detail when they send it, so you really can see what was worked on. And one more for the water and sewer receivables. There was a difference between the re-levy amount for the sewer bond from what the tax receiver had in the records versus the trial balance amount. So we do suggest it wasn't enough that we had to do something with it, but it is a difference, and we suggest that gets looked into and maybe compare records a little more so we have those numbers the same in the future. That is it for those suggestions. And then we do just provide a copy of your representation letter, which you sent us at the end of the audit, that basically just says that you guys have given us everything we need to do our audit. And that's it. Any questions?
Donna, the only question I have, and I know it mentioned any change in our policies.
Sure.
And I do believe that we went on transfers, which was $5,000. We went to $7,500 on transfers. So.
Oh, on your policy.
Yeah. So it just made life a little easier instead of bringing everything to the board.
Okay. I think in this case, I think this represents, if I'm not mistaken, this description talks about accounting policies that were
Yeah, it's accounting policies for your financial statements,
yeah,
not your internal policies.
Not
right.
our in-house policy.
Yeah.
Right. Okay.
Like that good. Next year will be this GASB 84. That one will be a change in accounting policies next year.
Gotcha. Okay, excellent.
But thank you.
Thank you. Anyone else with questions?
Yeah, I just have one quick one. Scott Manley here. Can you hear me okay?
Sure, yes.
I've been on the board 6 years, and we've had the same labor agreement. This is the first time you brought that up. And we do have an agreement where it states what's covered for each month. So you want just a list of what they did that month, or how come this is new that you brought this up this year?
We just happened to, when we were reviewing, I think we had a certain question when we were looking at the invoices. And we don't always look at all the invoices of all the attorneys every year. And I think there was a specific question we had asked Ron, and we had a discussion with him on how it would be just beneficial to have a more detailed thing. So we don't always look at everything every year, so it just might not have, we never really had a question before.
And Scott, you probably have an agreement that says, okay, you're going to handle, you know, these types of cases, but what we're recommending is that they actually detail, okay, I worked on the Joe Smith case. I worked on, you know, so that you actually know what within the scope of what you've hired him to do he was doing that month.
So it doesn't have to be hour by hour, but just an overall summary of each month.
Right.
Okay.
Anyone else? Betty, no questions?
I'm listening very carefully. I admire and you've done an excellent job. But you always do. We've been with you people for quite a while, and we've become friends besides clients.
All right, well, I appreciate that. And if nobody has any other questions, then I just want to say thank you very much for working with us again this year. And Ron, thank you for working with us through all this insanity. Ron was coming in the office and, you know, scanning things and sending them to us. And we were doing Zoom calls so he could show us things on the screen that he was looking at. It was a very different audit this year, but we got through.
Well,
Excellent.
we rely greatly on Ron. He was a true find to come with us a few years back.
Very good. Again, thanks to everyone. And I want to thank Ron and everyone else that works with the budget here, which is all the town board members too. So with that, Joe, I think we can close the meeting.
Is there a motion to adjourn?
Don't move.
Second, please.
I'll second it.
Okay, motion made and seconded to adjourn at 11:45 a.m. Mrs. Green?
Yes.
Mr. Ruggiero?
Yes.
Mr. Manley?
Yes.
Mr. Lobiondo?
He's muted.
He's still muted. You got to unmute.
Sorry about that. Yes.
Okay,
Okay.
Mr. Piaquadio?
Yes. All right. Again, thank you, everyone.
Thank you.
Have a good day.
Thank you.
Everyone, thank you.
Thank you.
Thank you.
You.